All right, guys, so let's review some of these federal laws. Specifically, all of these federal laws apply specifically if we have an employment relationship, not an independent contractor. So there's got to be an employment relationship. Okay, so employee classification we'll review. So you don't get paid by the job. You generally get paid by the hour or every 2 weeks, however it is. Normally, you don't have your own tools. You're going to be using the tools or whatever supplied by your employer. So your employer is going to control the method and manner in which you do your work. They're not just concerned with the results, okay? So make sure we first have an employment relationship. So all these payroll issues arise and only apply if we have an employee. Okay, so what do you got to remember about FICA? So Mr. FICA here. So we're going to provide workers and their dependents. So it's for workers and their dependents' benefits in case of death, disability, or retirement. So whether it's death, disability, or retirement. Okay, we have FICA, and we'll talk about FICA being funded by both the employer and the employee. We'll review. Okay, unemployment insurance, so FUTA. So with the unemployment insurance, no job, you get fired, but through no fault of your own. Okay, so it's not like you quit your job because you want June, July, and August off, and then you're going to collect unemployment. It doesn't work that way. So when you're terminated through no fault of your own. Okay, workers' comp we'll review. When you see workers' comp, you immediately think strict liability for on-the-job injuries. So strict liability, you can't sue your employer, but you'll see you can sue third parties. Okay, so strict liability in the event you get hurt on the job, even if you're negligent. Okay, even if you contribute to the injury through your own negligence, so long as it's not a self-inflicted injury, like I think I'd like to go out on disability for 6 months, so let me stab myself in the leg. It doesn't work that way, okay? But if you're contributorily negligent, then you can still collect your workers' comp. The last one, the Not So Affordable Care Act. Okay, so the Not So Affordable Care Act. So we want to give access to everyone to have affordable, theoretically, health care. I don't know what happened to it. So I guess we're dropping the word affordable. So health insurance of some sort, right? All righty, so let's take a look now at the details. Okay, so step number 1 on the exam for these payroll issues to apply, there's got to be an employment relationship. So the buzzword we're looking for is some type of control. Conversely, if you have your own business, you're an independent contractor. So if you get paid by the job and they're only concerned with the results, independent contractor. Okay, so you do the same type of work for lots of different groups or entities, whatever it may be. You're an independent contractor. None of these laws are going to apply. So make sure we have some situation where we have employment. So employer exercising control. Look for, again, payment by the hour. Okay, where the employer tells the employee where to go, what to do, how to do it, things of that nature. Happy? I don't think you got to be happy. I think you just got to be an employee. Chances are, though, you would not be happy being an employee, but whatever. Employment relationship. Okay, let's take a look at the next one. When you get a W-2, that is evidence of what? Employment relationship. So we've got an employee. Conversely, if you get a 1099, we know you're not an employee. You are an independent contractor. Okay, so independent contractor. So look for that evidence on the exam as to whether or not the payroll issues are going to be relevant or not. Okay, so very important. You guys got to know all about FICA. Okay, so both the employee and the employer are going to contribute towards FICA. Okay, second major thing is if you're self-employed, you're going to pay the whole thing. So some of the key things I'd like you guys to remember. Employee and the employer, well, that is unique to FICA and the Not So Affordable Care Act. Okay, so unique to both FICA and the Affordable Care Act. Now, employers match the employee's contribution. So employers match the employee's contribution. So they both contribute 7.65%. We'll talk more about that in just a little bit. Okay, when you're an employee, we're going to look at a percentage of your gross wages. And those gross wages are going to include commissions, bonus, what have you. When you're self-employed, you got to pay both halves. So when you're self-employed, General rule of thumb, we're looking at approximately 15.3%. We'll talk about the caps in a little bit, but 15.3%, you pay both halves, the 7.65 times 2, but this is on your net profits, not your gross sales. It's on your net profits. Okay, so when it comes to the FICA, some of the key issues, okay, and we'll review in greater detail, but you got to know all about the FICA. Okay, next one, FUTA. Okay, so whenever you see FUTA, I want you to immediately think 3 things right off the bat. Number 1, excludes the self-employed. Excludes self-employed. So unlike FICA, this excludes self-employed. Okay, number 2, employer funded only. So employer funded only. Okay, so there's no employee contribution. It's funded by the employer only. Now, you are subject to FUTA if your quarterly payroll greater than or equal to $1,500, or you have at least one employee 20 weeks a year. So at least that one employee 20 weeks a year. Okay. FUTA is deductible by the employer. So this is a business expense. It is in fact deductible by the employer. When you're self-employed and you pay FICA, 1/2 of the FICA is deductible, the employer portion. Okay? So FUTA is deductible by the employer. A couple of other things. Again, you lose your job. You're unemployed, but through no fault of your own. Okay, so no fault of your own. You didn't quit your job. Okay, you lose your job, but through no fault of your own. So read carefully. Look for a situation where Mary wants to go to the beach during the summer and collect some unemployment. Mary is not getting unemployment if she voluntarily quits her job. Okay, benefits, by the way, can exceed the contributions that were made on your behalf. So the benefits can exceed the contributions that were made on your behalf. That's popped up as well. Okay, next one. Workers' comp. You know what's going to happen to my man right here. My man's going down. He's going to be laying on the ground, crying, broke his arm or something like that. All right, workers' comp. You see workers' comp, you think strict liability. Okay, strict liability, any on the job, it's got to be on the job, not like you're playing softball on the weekend, then limp into work and say you got hurt on the job. It's got to be an on the job injury. Okay, so strict liability. You cannot sue your employer, okay, but you can sue third parties with the workers' comp. Okay, so it's a state-run program. State-run program. Most employers are going to participate. So most employers have to participate, and this is a deductible business expense. Okay, no payment, no benefits if you intentionally injure yourself or you're fighting or you're drunk on the job. So no benefits if it's intentional. So if you're drinking on the job or you get in a fight or something like that, or you intentionally hurt yourself, you're not getting any benefits. And again, cannot sue your employer. Cannot sue your employer, but you can sue third parties. Okay, so if there's a product that was negligently manufactured or designed, whatever the case may be, and the product hurt you, you can still sue the third party, but not your employer. Okay, so benefits for an on-the-job injury. We'll see more of that in a second. Okay, the last one is the Not So Affordable Care Act. What do I know about the Not So Affordable Care Act? Not much. I got to look it up. Take a look at this guy. So that's what he thinks about the bills he's paying, my man, right there. So the Not So Affordable Care Act, what was the purpose? Improve that access to health care in the U.S., providing workers to affordable, supposedly affordable health coverage. It could be a plan provided by the employer. It could be purchased through the health insurance marketplace. It could be coverage under a government-sponsored program, such as Medicare, whatever, Medicaid, whatever it may be, or a direct purchase by the employee from an insurance company. Okay, so both the employer and the employee are required to participate. All right, and that individual, you can obtain health care for yourself, your spouse, tax dependents. Okay, if you don't, you're going to pay a penalty. Funding is like FICA, both the employer as well as the employee. As a general rule of thumb, employer responsibility when you have 50 or more full-time employees, then you're what we call an applicable large employer. So those are some of the major issues there.